Bill here with the Metals Minute. Today is Monday, August 22nd, 2022. Well, we have the highest amount ever, over 131,000 ounces per day for the last 50 days in a row that has left the COMEX, physical metal that's departed from the COMEX. The highest 100-day average also we're also seeing that. But it's not only on the COMEX that physical gold is leaving. It's also from Swiss refineries. Swiss refineries in July tallied over 200 tons of gold that left for other nations. And that's the highest amount not only in this year, but in nearly 7 years. That's the most physical gold departing from the refiners in Switzerland. So we're seeing around the world, as the world begins to move away from paper and tangible assets and energy becomes more important, gold is taking a larger role in international finance. Now, let's contrast that with some of the charts that I've seen over the weekend. Financial pundits and analysts here in the United States that are trying to discourage people from purchasing gold. And one of the charts I've seen is a 10-year performance chart. And it has things like Apple stock and Amazon stock, and I think Apple was 755% over 10 years, and Amazon was over 1,000% in 10 years. And then it contrasts that with gold that in 10 years only made 8% in that period of time. That's not a reason to not buy gold now. That is a reason to buy gold, because gold's long-term average is about 8% per year. So if we've just had a 10-year period where there's only an 8% gain over 10 years, that means that it's due for an outsized performance going forward just to return to the long-term average. So it's not a good time to sell gold, it's a good time to be purchasing gold. And this is another impact on gold is Russia has announced the Moscow, there's a new exchange they're trying to develop to compete with the LBMA. As you may know, they were banned from participating in the LBMA when they invaded Ukraine. But there are a lot of nations that have been encouraging them to create an alternative pricing system. And the BRICS nations have expanded beyond just what the BRICS stands for. BRICS. It used to be just those 5 nations, but they have opened that up to anyone that's interested. And there's approximately, there's over 20 that have expressed an interest and are on board and already trading with the BRICS nations. And unlike the G7 or the G8 or even the G20, which is meant to be an exclusive club, the BRICS nations have made it a welcoming club to whoever wants to come and participate. And so they're with Russia being the 3rd largest producer of gold and one of the 3 main producers of other metals such as platinum and palladium and rhodium and some others, they're a significant player. And whether they're banned from the LBMA or not, there's a lot of people trading with Russia, and a lot of gold is being used as a world currency, as we can see by the exports from Switzerland. The gold is not playing a diminished role, it's playing an increasing role in world finance, including some of that exported metal from Switzerland has been coming to the United States. So that's a good reason for all of us to be, if we can, adding to our gold stack. Gold is not a speculative asset. It's a secure asset. So while it's we purchase it to preserve our purchasing power, now is also a strategic time because it has to outperform just to get back to long-term performance going forward. So, and we also see that gold is one of those assets that has demand worldwide. Even when dollars are in less demand, gold continues to be in high demand, physical gold. And so we encourage you to consider that. As a citizen, we should take cues from all these nations and governments around the world, including our own, that still has the highest official gold reserves in the world. There's a reason for that, and that should tell us what we need to know about purchasing gold. Thank you for tuning in. We'll see you again for the midweek summary and wrap-up on Wednesday. Have a good week.